Hello and welcome to the FX Smart channel. In this video, I'm going to introduce you to an amazing platform and a trading strategy that works so well that I just have to share it with you. It involves using Bollinger Bands and RSI. It's simple, easy to use, and has a pretty high success rate if you use it correctly. Well, enough talk, let's get straight to it. The first step for this strategy is to set up the Bollinger Bands. If you've never used Bollinger Bands before, you're in luck because this indicator is fantastic for identifying support and resistance levels. First, open your trading chart platform such as Fastbull or any other you prefer and go to the Indicators tab. Type in Bollinger Bands and add it to your chart. While the default settings provided by TradingView are good, we need to adjust them for our specific strategy. Change the period to 30 and ensure the standard deviation is set to 2. You can also customize the colors to your liking. If you're not familiar with Bollinger Bands, here's how they work. The center line represents a moving average. For our strategy, this means looking back 30 candlesticks to calculate the average. The upper and lower lines represent standard deviation lines. With the Bollinger Bands set up, our next step is to add the RSI. Open the Indicators tab, type RSI, and select the Relative Strength Index. Now, let's tweak the RSI settings. Set the upper band to 70 and the lower band to 30. The default length is typically 14, but for our purposes, adjust it to 13. If you haven't used RSI before, it's a fantastic tool for identifying whether a security is overbought or oversold. When the RSI line is above 70, the asset is considered overbought. Conversely, when the line is below 30, it's considered oversold. Now, let's combine these two indicators to start making profitable trades. Make sure to watch the rest of this video, as I'll share a crucial tip that will elevate this strategy from just okay to a money-making machine. There are two different strategies you can choose from when using these indicators. Both are built around the concept called mean reversion. What's mean reversion, you may ask? Well, mean refers to the average and reversion means returning to. So, mean reversion simply means returning to the average, which is precisely what we aim for with this strategy. As an example, in most cases, if there is extreme price movement in one direction, whether up or down, we can predict that after that big price movement, the price will return to the average, the moving average. So if the price goes above the upper Bollinger Band, we want to enter a short trade. If the price goes below the bottom Bollinger Band, we want to enter a long trade. As an example, in most cases, if there is an extreme price movement in one direction, whether it's up or down, we can predict that after that big price movement, the price will return to the moving average. Therefore, if the price goes above the upper Bollinger Band, we want to enter a short trade. Conversely, if the price goes below the bottom Bollinger Band, we want to enter a long trade. Simple enough, right? Well, if you did this by itself, the odds are it wouldn't work too well. That's why we added the RSI earlier. As you can see in this example, the price went above or below the Bollinger Bands many times, giving lots of false signals. So if you entered every time, you probably lost money. To solve this issue, we are going to add one more requirement. You can only enter a trade if the RSI hits an extreme value. This means we can only enter a long trade if the price moves below the lower Bollinger Band and the RSI goes below 25. For shorting, we will only enter a trade if the price goes above the upper Bollinger Band and the RSI goes over 75. If you're active in the financial markets, you know how crucial it is to have a website that covers all the essential economic news and reports. For quite some time, I've been using Fastbull, a platform packed with features that can significantly enhance your trading experience. Fastbull keeps you updated with important market news and reports. You can access signals and analyses from the world's top traders, chat with other traders, and benefit from their insights and knowledge. Moreover, Fastbull offers a comprehensive charting tool where you can add numerous indicators and set alarms, eliminating the need for a TradingView account. If you want to succeed in the financial markets, join Fastbull today and take advantage of its incredible features. Click the link in the description to sign up and start enjoying all the benefits Fastbull has to offer. Let's consider an example involving Apple stock. Suppose the price dips below the lower Bollinger Band. At this stage, the RSI isn't quite where we want it to be, so we wait until it falls below 25. In this case, it drops all the way to 20. We decide to enter a long position at this point, and as expected, the price returns to the average. However, there's a crucial piece of information you need to know to make this strategy successful. Without it, the strategy could end up being unprofitable. The main challenge with this strategy arises when the market is moving sideways. In such conditions, predicting price movements becomes significantly more difficult for nearly all trading strategies. Let's look at an example where the price falls below the lower Bollinger Band and the RSI drops below 25, but the price continues to decline. If you entered a trade at this point, you would incur a significant loss. To avoid such scenarios, here's a useful trick to anticipate these large price movements before they occur. Observe how narrow the Bollinger Bands are in this situation. The bands are closely packed, indicating minimal price movement and a sideways market. Additionally, the RSI remains stable within a narrow range, not reaching the critical levels we discussed earlier. This pattern is a major warning sign. When the market behaves this way for an extended period, any subsequent price breakout is often accompanied by strong momentum in the breakout direction. Therefore, in such cases, it's wise to avoid trying to catch a falling knife as the price begins to behave like this. Let me introduce you to another strategy that works incredibly well for this situation. Observe how the price drops to the lower Bollinger Band and then reverses. When it drops again, it makes a new lower low compared to the previous low. But there's an important detail: the RSI is forming a higher low. This phenomenon, where the price makes a lower low while the RSI makes a higher low, is known as divergence and is a strong signal to consider entering a trade. This signal is particularly powerful if the RSI was previously below 25 and the price had dropped below the lower Bollinger Band. When divergence occurs in this context, there's a very high probability that the price will reverse and move towards making a new higher high. I've just shared a method for combining Bollinger Bands and RSI to create a profitable trading strategy. If you found this helpful, I'd really appreciate it if you could take a moment to like this video. Also, check out my other video where I cover AMA-CD strategy with an impressive 86% win rate. It's quite remarkable in the trading world. Be sure to give it a look, and I'll see you next time.